The financial markets are reeling. They're reacting to a combination of factors. President Trump's trade policies are a major concern. His public criticism of Federal Reserve Chairman Jerome Powell is also unsettling investors. The stock market experienced a sharp decline. The US dollar is weakening. These events have raised concerns about the future of the US economy. Investors are looking for stability. They seek predictability. Trump's actions are creating uncertainty. This is causing anxiety in the markets. The situation is fluid. However, one thing is clear. The markets are sending a message. They are signaling their displeasure with the current economic policies and rhetoric coming from the White House. The world is watching closely. The coming days and weeks will be crucial in determining the long-term impact of these events. The stock market experienced a significant drop, sending shockwaves through the financial world. Investors and analysts alike were left scrambling to understand the sudden downturn. This occurred on April 21, 2025, a date that will be remembered for its financial turbulence. The Dow Jones Industrial Average plummeted by 972 points, marking one of the most significant single-day drops in recent history. This represents a 2.48% decline, a stark indicator of the market's volatility and the fragility of investor confidence. The S&P 500 fell by 2.36%, further compounding the sense of unease among market participants. The Nasdaq Composite experienced a 2.55% drop. These are significant losses that underscore the widespread impact of the market's downturn. They reflect a growing unease among investors, who are increasingly concerned about the stability of the financial system and the broader economy. The market decline is a direct response to the uncertainty surrounding Trump's policies, which have been a source of contention and debate among economic experts. The president's attacks on Powell have exacerbated the situation, creating additional layers of uncertainty and concern among investors. The market is a barometer of investor confidence, and recent events have shaken that confidence to its core. The recent decline indicates a lack of confidence in the current administration's economic policies, which many believe are contributing to the market's instability. Investors are concerned about the potential for a trade war, which could have far-reaching implications for global trade and economic growth. They are also worried about the president's interference with the Federal Reserve, which is seen as undermining the independence of this critical institution. The stock market decline is a warning sign, signaling potential trouble ahead for the economy if corrective measures are not taken. It suggests that the economy may be headed for trouble, with potential repercussions for businesses, consumers, and the broader financial system. The Trump administration needs to take steps to reassure investors, implementing policies that promote stability and confidence in the market. Failure to do so could have dire consequences for the economy, potentially leading to a prolonged period of financial instability and economic hardship. The US dollar is declining. It has fallen to a 3-year low. This is a significant development. The dollar is the world's reserve currency. Its decline has far-reaching implications. The dollar's decline is directly related to Trump's policies. His trade war with China is a major factor. His attacks on the Federal Reserve are also contributing to the dollar's weakness. Investors are losing confidence in the U.S. economy. They are selling their dollar holdings. A weak dollar makes imports more expensive. This can lead to inflation. It also makes U.S. assets less attractive to foreign investors. This can lead to capital flight. Both of these factors can harm the economy. The dollar's decline is a serious problem. It is a symptom of the deeper economic problems facing the United States. The Trump administration needs to address these problems urgently. President Trump has repeatedly attacked Federal Reserve Chairman Jerome Powell. These attacks have been both public and relentless, showcasing Trump's dissatisfaction with Powell's handling of monetary policy. He has called Powell a major loser on social media, using his Twitter platform to voice his frustrations. This kind of direct and personal attack on a sitting Federal Reserve chairman is highly unusual and has raised many eyebrows. He has publicly expressed his desire to remove Powell from office, a move that would be unprecedented in modern American history. Trump's dissatisfaction stems from Powell's reluctance to cut interest rates as aggressively as Trump would like. The Trump administration is reportedly exploring legal options for removing Powell. This has led to a flurry of legal debates and discussions about the extent of presidential power over the Federal Reserve. Trump's attacks on Powell are unprecedented. No other president has so openly and aggressively targeted the head of the Federal Reserve, an institution that is supposed to operate independently of political influence. No previous president has so blatantly interfered with the Federal Reserve. Historically, the Fed has been allowed to make decisions based on economic data and analysis, free from political pressure. The Fed is supposed to be independent of political pressure. This independence is crucial for maintaining the credibility and effectiveness of monetary policy. Trump's actions are undermining the Fed's independence. By attacking Powell and attempting to influence the Fed's decisions, Trump is eroding the trust that markets and the public have in the institution. Trump's attacks on Powell are motivated by his desire to boost the economy. He believes that lower interest rates will stimulate economic growth, making it easier for businesses to borrow and invest. He believes that lower interest rates will stimulate economic growth. However, the Federal Reserve's mandate is to balance economic growth with controlling inflation and maintaining employment, not just to follow the president's wishes. However, his attempts to bully the Fed into cutting rates are backfiring. Instead of creating confidence, these actions are causing uncertainty and concern among investors and economists. Investors are concerned about Trump's interference with the Fed. They worry that such interference could lead to poor economic decisions that might harm the long-term health of the economy. They see it as a sign of desperation. When a president tries to exert this level of control over an independent institution, it signals that he may be more concerned with short-term gains than with sustainable economic policy. They are worried that Trump is putting his own political interests ahead of the country's economic well-being. This kind of behavior can undermine the stability and predictability that are essential for a healthy economy. Experts are expressing concern about Trump's actions. Financial analysts, economists, and market strategists are all weighing in on the potential fallout. Their collective voice is growing louder as they warn of the possible repercussions. They warn that his attempts to interfere with the Federal Reserve could have dire consequences for the economy. The Federal Reserve, an institution designed to operate independently of political influence, is seen as a cornerstone of economic stability. Any attempts to undermine its autonomy could lead to unpredictable and potentially catastrophic outcomes. Sam Stovall of CFRA states that Wall Street dislikes Trump's attempts to control monetary policy. He explains that investors crave predictability and stability, and any signs of political meddling can cause market volatility. The stock market thrives on confidence, and when that confidence is shaken, the effects can be far-reaching. Jonas Golterman of Capital Economics warns that Trump's approach could undermine the U.S. dollar and U.S. asset markets. The strength of the U.S. dollar is a reflection of global confidence in the American economy. If that confidence erodes, it could lead to a devaluation of the dollar, making imports more expensive and potentially sparking inflation. Krishna Guha of Evercore ISI believes that the market is showing a loss of confidence in Trump's economic policy. He points to recent market trends that suggest investors are becoming increasingly wary. This loss of confidence can manifest in various ways, from reduced investment to increased market volatility. Macquarie analysts point to a flight from USD due to Fed independence concerns and the lack of trade deals. They highlight that the uncertainty surrounding trade negotiations is compounding the problem. When investors are unsure about the future, they tend to seek safer assets, leading to a sell-off of the US dollar. Joseph E. Gagnon of the Peterson Institute argues that political interference in monetary policy risks higher inflation. He explains that the Federal Reserve's primary tools for controlling inflation are interest rates and monetary policy. If these tools are compromised by political agendas, it could lead to runaway inflation, which would erode purchasing power and destabilize the economy. Jed Ellerbrook of Argent Capital Management emphasizes that the Fed's independence is crucial for market stability. He stresses that the Federal Reserve's ability to make decisions based on economic data rather than political pressure is essential for maintaining investor confidence and ensuring long-term economic health. These expert opinions paint a bleak picture. The consensus among financial experts is that the current trajectory is fraught with risk. They caution that without a course correction, the U.S. economy could face significant challenges in the near future. They suggest that Trump's actions are creating significant risks for the U.S. economy. The potential for increased market volatility, a weakened dollar, and higher inflation are just a few of the concerns being raised. The long-term implications of these risks could be profound, affecting everything from job growth to international trade. The president's disregard for expert advice is deeply troubling. Financial experts argue that ignoring the counsel of seasoned economists and market analysts could lead to misguided policies. The stakes are high, and the need for informed decision-making has never been more critical. President Trump's trade war with China is another major source of economic uncertainty. Trump has imposed tariffs on billions of dollars worth of Chinese goods. China has retaliated with tariffs of its own. The trade war is hurting both the U.S. and Chinese economies. It is disrupting global supply chains. It is raising prices for consumers and businesses. It is creating uncertainty and undermining business confidence. Jerome Powell has warned that tariffs could stoke inflation and hinder economic growth. The International Monetary Fund has also warned about the negative impact of the trade war on the global economy. The trade war is a self-inflicted wound. It is a result of President Trump's misguided belief that he can win a trade war. The reality is that trade wars are not easy to win. They often end up hurting everyone involved. The Federal Reserve is supposed to be independent of political pressure. This independence is crucial for its credibility. It allows the Fed to make decisions based on economic fundamentals, not political expediency. Trump's attacks on Powell are a direct assault on the Fed's independence. He is attempting to bully the Fed into doing his bidding. This is a dangerous precedent. It undermines the Fed's credibility and its ability to effectively manage the economy. A politicized Fed is a recipe for disaster. It could lead to inflation, economic instability, and a loss of confidence in the U.S. economy. It is essential that the Fed's independence be protected. Congress has a responsibility to defend the Fed from Trump's attacks. It must make it clear that the president cannot interfere with the Fed's decision-making. Failure to do so would have dire consequences for the U.S. economy. Subscribe for more such informative videos, and thanks for watching.